The discount rate used for a cash flow analysis of an investment property is defined as that rate of return from an investment that compensates the investor for the risk taken. As risk rises, the compensation for the level of risk rises too. This is reflected in a rise in the required return, and hence a rise in the discount rate used to discount the cash flows back to a present value. If risk falls, the required discount rate must be reduced. The compensation is defined referring to the return on an alternative form of low-risk or risk-free asset. Usually, the risk-free return is taken to be the income yield on government bond. The return from a property investment can then be calculated by adding an acceptable allowance for the risk of holding the investment property asset, a risk premium, RP, to the return on a risk-free asset, RFR. Although this is a relatively straightforward process, when determining the risk premium attributable to an investment property is more complex, due to property's heterogeneity that makes the calculation of an appropriate risk premium more difficult. Risk assessment and discount rates. Two investment properties are almost never identical and risk premiums will differ on most exercises. So, the factors in deriving a property risk premium are: risk-free rate of investment, sale liquidity due to lot size, transaction environment, cost and availability of finance, risk in meeting market rental growth expectations, risk in meeting market yield shift forecast, risk of locational, economic, physical changes, legislative change risks, for example planning zone changes and changes in fiscal policy, rental payment, vacancy rate risk, costs of ownership and management. The accepted market norm risk has been that certain elements of risk are best incorporated through adjustment of the discount rate and that certain risks are best incorporated in the cash flow itself. A target rate is the risk-free rate plus a risk premium. Even if the risk-free rate can be determined by reference to other investment markets, the risk premium is more difficult to assess and there is no universally accepted approach to determine the measurement of risk. Risk adjustment. If it was possible to determine a risk premium to each factor, their sum would then give us an accurate risk premium for each investment property. However, there are several inconsistencies and problems in determining the risk premium. Determining separate risk premium for each risk factor is a complex and time-consuming process, and in the majority of cases would be impossible to calculate given the scope and size of the various investment markets. There is a degree of overlap between risk factors. Even in such a risk-explicit approach, it is very difficult to eliminate double counting of risk in some form. One approach to offset these problems is to use the same risk-free rate for a group of factors. This approach differentiates between the different risk profiles of subsectors of investment property classes. For example, high street shops, secondary industrials and more, by adjusting up or down the market risk premium to reflect the risks associated specifically with the subsector of property being analyzed. This makes possible the calculation of an overall property risk premium. This approach to grouping individual property risk characteristics, for example properties with similar covenant risks or lease structures, is less time-consuming than identifying a risk premium for each factor. The equation is target rate equals risk-free rate plus market risks plus property risks, where market risks equals subsector risk of market failure, liquidity, poor rental or yield performance plus allowance for subsector depreciation, and property risks equals covenant adjustment for subsector or lease structures. Shows how such an intermediate approach may be built up. This analysis should always be undertaken in the context of current market property yields and allows the investor to build a model for the appropriate discount rate or target rate, making a good deal of the process explicit without the need for committing to intensive research for each calculation. If you have found this video useful, please like, share and subscribe for more videos and write your comments or questions.